Fraser and Neff Holding Berhad (FNN) is among the region's oldest and most established food and beverage companies, with its brands enjoying the distinctions of being the market leaders and household names in many categories. FNN Holding Berhad also operates in Malaysia, Brunei, Thailand, and Indochina, and it is a subsidiary of Fraser and Neff Public Limited Company. It was founded by John Fraser and David Chalmers Neff in 1883 in Singapore. Then it was found in Malaysia in 1961 that located in Kuala Lumpur. FNS Holding Berhad's principal activities are in the manufacturing, marketing, distributions, and selling the soft drinks and dairy products. This company also offers a few products such as isotonic, carbonated soft drinks, condensed and evaporated milks, juice, and so on. From a soft drink base, FNS ventured into the business of beers in 1931, then dairies in 1959, property developments and management in 1990, and publishing printings in 2000. FNS ranks as one of the most established and successful companies in the regions, with impressive array of pre-owned brands that enjoy the strong market leadership. FNS is present in 11 countries spanning Asia Pacific and USA and employs over 6,900 people worldwide.
Assalamualaikum warahmatullahi wabarakatuh. My name is Nur Sarah binti Muhammad Rashid, and I'll be presenting for the introduction of Dutch Lady Milk Industries Berhad. Dutch Lady Milk Industries Berhad, or known in the industries as Dutch Lady Malaysia, is a well-known manufacturer of cow milk and dairy products in Malaysia since the establishment in 1963. Dutch Lady Milk Industry was founded on 28 May 1963, around 58 years ago in Petaling Jaya, Selangor, Malaysia. The company was previously under a Netherlands-based multinational cooperative, Royal Friesland Foods, and currently a subsidiary of Friesland Campina, which was formed in December 2008 as a result of the merger of company between Friesland Foods and Campina. Dutch Lady Malaysia is well known with their products such as growing up milk, UHT milk, pasteurized milk, sterilized milk, and many more.
Assalamualaikum warahmatullahi wabarakatuh. My name is Aina Jo binti Zulkifli, and I will be presenting on financial analysis for FNN Group. The financial analysis will be presented in 4 terms, which is liquidity, profitability, efficiency, and leverage. For the first term, which is liquidity, we calculate the liquidity in current ratio and also for the quick ratio. We managed to analyze for current ratio that the company has RM2.42 of current asset for every 1 ringgit of current liability that they need to repay. Meanwhile, in quick ratio, the company actually have an amount of 1 ringgit and 51 cent of current asset to repay every 1 ringgit of current liability that they have. In terms of liquidity, the higher of current asset that they have to repay for every 1 ringgit of current liability, the better the company performance is, because it shows that the company manage and able to pay their short-term obligation on time. Secondly, profitability. Profitability is analyzed to measure on how effective the company in generating profit. As we went through the company financial statement, we can see that the company does generate more profit by year. However, based on our calculation on their profitability ratios, we can analyze that the company gross profit ratio is only 31%, which means for every 1 ringgit of sales that the company earn, the company only receive a total of gross profit of 31 cents. Meanwhile, for the net profit ratio, the company only receive a total ratio of 10% only, which means for every 1 ringgit of sales, the company only generate a total of net profit of 10 cents only. Meanwhile, for return of capital employed, the company actually earn a total of 18.6% for every 1 ringgit of capital that we invested in the company, which means for the investor, they will receive a total of 80 cents for every 1 ringgit of capital that they invested in the company. If the situation does not improve in the long term, the investor might lose interest to invest in the company since the return on the investment is relatively low. Alright, so thirdly is efficiency ratio. This ratio is to measure on how efficient the company manage their assets and resources. So for the first aspect that we count under the efficiency ratio is inventory turnover. For F&N company, they receive a total of inventory turnover of 4 times during their accounting periods. The inventory turnover indicate on how many the company have replaced their inventory during their entire accounting period. The higher the number of inventory turnover, the better it is for the company efficiency. As for F&N, they only managed to replace the inventory as 4 times within the accounting periods, which means that they need to improve their marketing strategies to ensure that their sales increase in the future. Next one is average collection period. Average collection period is amount of periods that the company took to eventually collect all of the credit sales from their trade receivables. Usually for average industry of food and beverages, it will take around a month or less than a month for them to collect money from their credit sales. But for F&N, they took around 62 days to eventually collect all of the credit sales from their creditors, which means the company need to improve on how they manage their resources, which in this case is their creditors, to ensure that the company will actually receive their sales on time and also to avoid decrease of demand in the future. The company also need to make sure that they manage to shorten the gap of their average collection period to avoid all the credit sales from their creditors turn to bad debts, which eventually will lead to a company loss. Lastly, total asset turnover. Total asset turnover refers to how well the company managed their assets for them to generate income to the company. And based on our calculation, we managed to analyze that the company actually received a total of profit of 1 ringgit and 1 cent for every 1 ringgit of net sales that the company generates, which is a little bit lower than the industry average, because F&N actually have relatively quite a high amount of asset, but only managed to receive a total of profit of 1 ringgit and 1 cent for their asset. The company needs to improve the total asset turnover by investing the asset to generate more profit in the future. Lastly, on the fourth term, which is the leverage ratio, the ratio is to measure on what are the risks that the company will face in the future in order to pay for their long-term obligations. Alright, so for the first one is the debt ratio. We managed to analyze that the company have a total of debt ratio of 23.56%, which means that only 23.56% of its asset is financed by debt. Meanwhile, for their debt to equity ratio, we managed to analyze that the company have a total of 101.57% of debt to equity ratio, which means most of the company capitals are financed by debt. And the same goes to their times interest earned, which refers to the amount of interest that the company earned to repay their debt. For F&M, they have a whopping number of 108 times of interest that they need to pay based on their earnings before interest and tax, which means the company is paying 108 times more than the company's earnings, which means the company is at a great risk of bankruptcy because most of their equity and also the time of interest their company earn are actually far more than what the company afford to pay. If the company does not improve their debt management in the future, the company will actually suffer a great bankruptcy due to their high number of debt.
Assalamualaikum warahmatullahi wabarakatuh. My name is Nur Adana Akmal binti Adi Isani, and today I'm going to present the performance of Dash Lady company. The first one is liquidity. Current ratio. The current ratio is a measure of a company's ability to pay its debt, and it's derived by dividing current assets by its liabilities. The lower the ratio, the bigger the company's liquidity risk. Consequently, it is possible that Dash Lady will find it difficult to pay back her loans. Quick test ratio. The quick test ratio is a metric used to assess a company's short-term viability. Every 1 ringgit in current liabilities, Dash Lady has 42 cents in liquid assets to repay the current liabilities. Dash Lady liquid assets are less than the debts they own. Because of this, Dash Lady is unable to meet all of their financial obligations on time. The next one is profitability. Gross profit ratio as a measure of gross profitability. The gross profit ratio is a useful metric. Dash Lady's gross profit margin is 32 cents for every 1 ringgit in sales. This shows that Dash Lady did not earn more money than it paid for itself. It served as a reminder to keep an eye out for the various components of gross profit generated by the competition. Net profit margin. The net profit ratio of a company is the ratio of net profits after taxes to net sales of the company. Dash Lady is able to produce 6 cents in net profit for every 1 ringgit in sales that it generates. As a result, the operating efficiency of the company is low and cannot be compared to that of the industry or its competitors in any way. Return on capital employed. Management's success in making the most of the money it has at its disposal is measured by the return on capital employed. Dash Lady generates 56 cents operating profit for every 1 ringgit of capital invested. Both stock and debt are included in this formulation. As a result, Dash Lady has a low overall money use efficiency. Return on assets. Every dollar invested in assets return an equal amount of net profit in the form of a return on investment. Each 1 ringgit in asset yields 15 cents in profit for Dash Lady. Consequently, Dash Lady's less efficient and effective use of assets affects profitability directly. The next one is efficiency. Inventory turnover. Inventory turnover is a financial ratio that shows how many times a company inventory has been sold and replaced in a given period. Dash Lady has replaced its typical inventory 5 times in an accounting period. Since spoiling might lead to inventory losses, Dash Lady will sell and replace its inventory about once every 1 or 2 months. Average collecting period. The average time it takes for a corporation to collect on a credit sale is known as the collection period. Within 34 days of the accounting period, Dash Lady is unable to recover its loan. This shows that Dash Lady is seeing a decline in sales and a decrease in demand for its items. Total assets turnover. Total assets turnover is a financial ratio that indicates how efficiently a business uses its assets to generate revenue or income. Dash Lady can make 2 ringgit and 30 cents in net sales for every 1 ringgit in average total assets. Therefore, a greater ratio is preferred since it indicates that Dash Lady is effective at generating sales or income from its asset base. The last one is leverage. Debt ratio. A company's total debt to total asset leverage level is expressed as a debt ratio. 66.6% of Dash Lady assets were financed by debt. The Dash Lady's assets are largely funded by debt, making it more difficult to obtain credit. Debt to equity ratio. Investors' equity and debt are utilized to finance the company's asset in proportion to its debt to equity ratio. In comparison to investor contributions, the Dash Lady creditors contribute only 6% of the total. The assets are therefore mostly financed by equity, and Dash Lady financial leverage is essentially based on wholly owned funds. Last one is time interest earned. Debt repayment ability can be measured by the amount of time interest earned by a corporation. The Dutch lady interest payments are more than 31 times the amount of its pre-tax profits that must be paid. It was for this reason that the Dutch lady was seen as having a far greater potential for financial instabilities such as bankruptcy or default. That's all from me. Thank you.
As a conclusion, all the financial ratios, which consisting of liquidity ratios, profitability ratios, efficiency ratio, and leverage ratio from these two public listed companies in the same industry, which are FNN Holdings Berhad and Dutch Lady Milk Industry Berhad, for the year ended in the year of 2020 has been analyzed. The analysis result clearly shown the differences and comparison of the financial ratios among these two companies. We can see that the FNN company shows a higher ratios and a higher liquidity based on the liquidity ratio, which is for every 1 ringgit of current liability, the FNN company has 2 ringgit 42 cents of current assets to repay the current liability, differ with Dutch Lady as they only have 0.89 cents for every 1 ringgit of the current liability. Additionally, for every 1 ringgit of current liability, the company has 1 ringgit 51 cents higher than Dutch Lady company, which they only had 0.42 cents of its liquid asset to repay the current liability. Hence, FNN company shown a better performance as their ratios and liquidity is higher than Dutch Lady company. From the view of profitability ratios, Dutch Lady company have a higher profitability ratios in the gross profit ratio and return on capital employed, whereby difference is 1.4% on gross profit ratio and 37.2% difference for the return on capital employed. Meanwhile, for the net profit ratio, the FNN company earned 3.3% more higher than Dutch Lady. In deciding the better performance, the higher profitability ratios that shows by the company the good quality of performance that they had in their company. There is a time whereas the company failed to earn more profit that causing the low gross profit margin, such as having an insufficient sales volume or low selling price. We move to the efficiency ratio, whereby in the return on asset of FNN company, they managed to earn 12 ringgit for every 1 ringgit of assets, compared to Dutch Lady as they managed to earn more, which is 50 ringgit for every 1 ringgit of their assets. Plus, within an accounting period which is in 2020, the FNN company has replaced its average inventory for almost 4.4 times compared to Dutch Lady company, which is 5 times. Moreover, in collecting the debt for FNN company, they took much longer time contrary to Dutch Lady company, whereas they need 62 days compared to 34 days for Dutch Lady in collecting their debts. For total assets turnover, every 1 ringgit of average total assets for Dutch Lady company, the company able to generate 2 ringgit 30 cent way much higher than FNN, which is only 1 ringgit 10 cent. Thus, the faster the company is able to utilize their sources, the way more efficiency the performance of their company. Last but not least, for leverage ratios, FNN company needs to bear 23.56% for the debt ratio compared to 66.6% for Dutch Lady company. The higher debt that Dutch Lady company need to bear will be resulting a riskier for the company to gain more profit as they need to pay for the debt. Meanwhile, for debt to equity ratio, the company of Dutch Lady shows a lower percentage that measures the relationship between the capital contributed by creditors and the capital contributed by shareholders, which is 6%. Finally, for the times interest earned, still, Dutch Lady company have a lower times compared to FNN company, which is required 31 times for the Dutch Lady company to pay the debt that they owe, compared to FNN company as they need to pay for 108 times to settle down for all the debts. Consequently, it is very crucial to do the financial analysis, as this is functional to determine whether the company is stable, solvent, liquid, or profitable enough to warrant a financial investment. It is used to assess economic trends, set financial policies, develop long-term company goals, and find potential investment projects or firm. That's all for me. Thank you.
As a potential supplier and investor, we will choose the Dutch lady companies because based on our analysis, the profitability ratio of Dutch lady show that it able to earn profit from its sales or operations efficiently. It can be proved by the gross profit ratios where the companies is able to earn profit more than 30%. Other than that, the company also able to use its asset to generate income. This is because they use 5 times to sold or to replace the stock in order to get income. Last but not least, as the investor, we will look for the companies to have lower debt ratios. Dutch Lady shown it has a debt ratios lower than FNS Holding Berhad, which is 66.6%.